Hey, it's Mike, and today I want to talk about time in the market. I want to talk about why time in the market is better than timing the market. You may have heard of that saying before, but maybe not have thought much about it. So I just wanted to talk about the importance of if you're a very young investor, that it's important that you get any amount of money, even if you have like a couple of $100, and you just put it in the market and let time play on your side. Because the more time you have for your investments to work, the more wealth you can build. So, the stock market has an upward bias, and that's really pretty much because you get a lot of companies, a lot of businesses, and a lot of sovereign governments that have a lot of cash, and it's fiat cash. So that means that cash is going to lose value. So they need to put that money in something that can rise in value over time, and usually that money will go into the stock market. And because of that, the stock market tends probably about 90% of the time to move up. Yes, there are violent crashes and drawdowns in the stock market, but overall the stock market moves up. That's why you want to take any money you have and just put it in the stock market and allow it to appreciate. Now, that bias is more pronounced today due to excess money printing, especially in the past 2 years with the pandemic. You've had an incredible amount of money get printed, and because of that, the price of equities are going to move higher, probably significantly higher over the next decade. So leaving your money in the market over decades can indeed make you rich. In fact, if you take $10,000 and you put it in the S&P 500 and make no trades, you just put in the S&P 500 index, you'll probably get on average about 9% a year and become a millionaire in 45 years. Now, I know for some people who look at people who get rich very quickly, that doesn't seem ideal. However, if you just, let's say, have $10,000 and you're not going to do anything with that $10,000, you just leave it in the market, you already know that 45 years from now, probably when you're an old person, you'll have $1 million. And trust me, you're going to be a lot better off than a lot of people who are elderly, who took their money when they were young and squandered it and, on stuff that has no value to them when they get older. And when they get older, they're dependent on Social Security checks or a meager pension to get them by. It's good to know, hey, I took this money when I was young. I just put in the market and left it there. And now that I'm older, I have this incredible level of security where I have my Social Security plus this extra income I can draw from and give you a comfortable retirement. Now, trading in and out of the market can be hard because short-term moves in the market are unpredictable and sometimes irrational. You could probably look at the market and go, why did it just go down 5%? There was no news. And it could be because, one hedge fund decided to sell, that caused some panic selling, and retail investors panic sold, and all of a sudden the market goes down. Or you could think, hey, the market should be down, but all of a sudden it pops up like 5% for no reason. And if you try to trade in and out of the market too frequently, you can, pretty much decimate your portfolio. Also, trade on the market when it's going down is not always the best option. Just to give you an example here, the second biggest down day in the Dow's history was March 16, 2020. We know because of the pandemic, the Dow fell over 12%. However, the fourth biggest day in the Dow was March 24th. 8 days later, the Dow soared more than 12%. So the thing is, when you see a crash in the market, I know it's very painful to see your portfolio maybe lose 20, 30, 40, 50% of its value in a couple of days. The best thing to do, honestly, is nothing, because usually the biggest up days in the markets will come right after the biggest down days. So sometimes the best thing to do is to simply do nothing and just wait. So when in doubt, simply stay in the market. And I just want to emphasize here, 8 of the biggest up days in the market have come within 10 trading days of the 10 of the biggest down days. So that's why it's important, as the example I stated before. It's just better to stay in the market in good times and bad times, because overall, over time, you're going to make money by just staying in the market. So, the party message I want to say is, I know I have a lot of young viewers who are maybe in their 20s. Keep your money in the market, and by the time you are in your 50s and 60s, you're going to notice some incredible returns, and those returns will give you a really comfortable life and build some incredible wealth. So that's why it's very important to stay in the market for as much as possible, and don't let market crashes, don't let uncertainty in the markets shake you out. So I hope you enjoyed this video. If you did, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, options, and stock trading strategies. Thanks a lot.